Good afternoon and welcome to the KAPE Technologies PLC Interim Results Investor Presentation. Throughout this recorded presentation, investors will be in listen-only mode. Questions are encouraged and can be submitted at any time via the Q&A tab situated on the right-hand corner of your screen. Just simply type in your questions and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, the company will review all questions submitted today and publish responses where it is appropriate to do so. Before we begin, I'd like to submit the following poll. I'd now like to hand you over to Ido Ehrlichman, CEO. Good afternoon to you, sir.
Thank you very much. Good afternoon, and thank you everyone for joining for KAPE's first half of 2022 results. I suggest I take you through the deck, and we'll give you an overview, granular overview on the latest developments in the first 6 months of the year, both the organic activity, the integration with ExpressVPN, which obviously was key for the year, and we will give you the background and the details about the placing we announced today. Overall, KAPE today serve more than 7 million paying customers. We are the only scalable platform that focusing only on helping people to live more secure and private digital life. Everything we do is starting from the angle of improving and protecting our customers' digital information, and gradually we're expanding our product offering to capture and offer a great level of security that is easy to use to each one of the millions that trust us in protecting their digital information. And it makes us very unique because there are not too many businesses in our scale that identify and were able to build themselves gradually to be one of the preferred providers of millions of people around the world that's looking to gain back the control on the information they share online. And we were able to grow gradually, both organically and through acquisitions, and to scale up our revenue in a very profitable way. In the first half of the year, we crossed the $302.4 million, which is up 216.6% compared to the first half of the previous year. And on a full performance basis, we're growing 19% in the top line. Remain very profitable, even slightly higher than what we had in the budget initially. So in the first half of the year, we were at around 29% EBITDA margin to $88.9 million in total, and very cash generative. So in the first half, we generated above $90.1 million, which is a cash conversion of over 100%. Very profitable, retention rates about 82%, and the majority of our revenues are coming from subscription basis. 88.6% of our revenues in the period on a pure subscription base, which obviously gives us a great predictability of our future performance, and now serving more than 7 million paying customers globally. Integration of ExpressVPN. So a lot of companies saying that they are keen to do transformational deals. We did it a few times, and obviously the last and most significant example is the merger with ExpressVPN. ExpressVPN is now 9 months into the integration with KAPE, and we are there. So a lot of the things that we wanted to achieve this year were already completed. We unified the management team. The two founders of ExpressVPN were appointed as GMs of the digital privacy segments, driving the integration forward very successfully. Dan Pomeranz joining the board of KAPE, which is great, and we are very pleased that Dan is joining the board and be an integral part of the leadership of the group. Cost synergies were on track. We indicated the market of $9 million of overall cost savings, which is on an annualized level, $30 million. We will be there very comfortably. We will realize all the cost synergies that were planned for the year. And one of the things that we've done initially, and this is always a priority when you do an acquisition, is to reduce the uncertainties and to combine the two teams together. This is already completed. The R&D of the two teams both the KAPE digital privacy segment and ExpressVPN are working as one consolidated team under the leadership of Peter, one of the founders of ExpressVPN. Marketing as well, fully combined. I think that it was enabled us a significant firepower to go speak with all of our marketing partners, one strong unified portfolio of strong software solutions that enable us to negotiate and drive down the customer acquisition cost and continue to build up on the very strong positioning of KAPE in the direct-to-consumer channels. G&A, we integrated to the KAPE platform, all the financial reporting and processes, compliance, etc., all done by the KAPE team. And this is obviously something that we did 3 times in the past very successfully. And customer support, as of the 1st of September, completely in-house. So overall, I'm very pleased with the way that ExpressVPN was integrated into the group and the expansion in talent and management bandwidth that we gain as part of the team at ExpressVPN joining the group. The market remained very strong. So obviously this year we see in a lot of places around the world the pressure of inflation and fears of recession. I think that the results of KAPE in the first half of the year show the strength of our value proposition. And this was built gradually. And we've seen the digital privacy as a market growing and moving from the early adoption stage to the mass market, and becoming more and more critical in the daily life of millions of people around the world. It's almost like the perfect storm that we see that the cyber risk is only going up, the entry barriers are much higher, and KAPE and some of our more established competitors are able to enjoy from the growth in the market and improve and gain significant market shares in the more attractive market for companies like us. In addition to the fact that we all as individuals spend much more time connecting to unsecured Wi-Fi network, and the amount of devices connecting to the internet is only going up. The understanding and the education of people that they need to be more proactive in gaining back the control on the information they share, not just continuing to drive very solid growth into the market. And one of the things that we like is that the majority of our customers are subscribers between the age of 20 to 45. This is the most sought after clients of lots of tech businesses around the world. We have them. We have millions of people that are always on the go, using multiple devices that trust us in protecting their digital life. They understand the value of enabling thousands or hundreds of organizations to track their online activity, and they chose KAPE to be the preferred provider in protecting the digital information. And this is something that we don't take for granted, and we want to continue work hard and expand our product offering to offer them more and more security to everything they do on their daily digital routine. And naturally, like before, we are focusing on markets that drive the highest lifetime value over time. And say 75% of our revenues in the first half of the year are coming from North America and Western European countries. Now, when we look on our growth strategy, it's a combination of few things. Firstly, we will continue to be mainly direct-to-consumer business. We will want to continue build up the proportion of sales coming from organic traffic sources, as well as to accelerate the customer acquisition activity, expand the product offering both organically and through acquisition. That over time will continue to enable us to build up a very strong product offering, like we already have both in the digital privacy and in the digital security segments. Why KAPE is winning, why we are consistently year over year able to grow subscriber base very efficiently and gain a lot of market share from the more traditional providers in the space. It's a combination of few things. First of all, our understanding of how our customers like to consume software. We are working with people between 20 to 45. They like that everything is very user-friendly, connect easily, All the integration are smooth, and this is what drives our product strategy and product development. In addition to the decision to work in a multi-brand strategy that enables us to differentiate and tailor the offering to certain type of users, like ExpressVPN, which is our premium brands being sold in a much higher price point, CyberGhost as a mainstream brand capturing more wider audience, and PIA that is more designated to more advanced digital privacy users. In addition, we are differentiated in the quality of the technology, because ultimately what we offer people is in one click to have a fully secure, private, stable, and fast internet connection. The fact that we were able over the years to build up a very advanced tech platform, and we unify the technology that all of our products and ExpressVPN very shortly will be delivered through one consolidated tech platform, gives us a lot of flexibility. Lightway is our own proprietary VPN protocol that consistently able to show and provide and deliver very, very good level of speed while it's completely encrypted. The trusted server network that is a critical part of our delivery, in which we created a global network of servers that is completely secure. Don't keep any logs of data that goes into our global private network, and enabling us not just to provide full encryption, but as well very advanced security measures. And the dedicated IP is a third example of a product that we launched during the first half of last year, that the idea was to still provide A to Z encryption, but to allow the customer to establish or to access remotely certain tech assets while continuing to enjoy from a fully secure and private internet connection. The second element that enable KAPE year after year to gain market share and to grow in a very efficient way while driving very attractive unit economics is the fact that we look on our product not just as the end solution, not just the product that the user buy and pay a subscription, but the whole user journey. This is one of the reasons that KAPE historically were able to drive the product development whilst understanding how our users buy and use our software solutions. From the initial stage of building up the awareness, we now, through the acquisition of Webcellence, that is our digital content business, drive and enjoy from an audience of more than 120 million people in different parts of the world in 29 different languages. And we help them in every step until they take the purchase decision while optimizing the conversion rates along the way. And this is what we call the final approach. Every step we would like to make as efficient as possible. And even when the customer become a subscriber, we invest a lot of effort to that all the communication between the company, our products, and our user base will be done through our own team and all in our own infrastructure. This is critical, especially if you want to scale up a successful SaaS business. A recent example is the decision to bring in-house all the customer support activity of Express, and we will continue to expand our channel partner network. We are very happy to work with the big brands like KAPE and ExpressVPN, if it's HP, Acer, Philips, Nokia, that gives us access to millions of different potential customers around the world. Even though we were able to scale up and now we crossed over this 7 million paying subscribers, we are still at the beginning of our ability to control and dominate our key markets. On the right side of the slide, you can see that KAPE in the key markets that we are focusing on, if it's the USA, Germany, Europe, and in general Western Europe, we're around the 15% on average from existing market without accounting to future growth, and which leaves us very confident that there's so much much more we can do in growing our customer base in the top markets. We are focusing on markets that we know well, that drive lifetime, a very strong lifetime value over the years, and we proved that we know to do it well. So on the left-hand side, you see our digital privacy subscriber base that year over year we were able to scale up and build up a very strong proportion between the key markets that we are prioritizing. Now, KAPE, in terms of our growth strategy, and this is true to every SaaS business, but it was a very significant part in our growth strategy so far, and will continue to be, that we grow from adding new subscribers to our platform. And obviously, we would like to minimize churn as much as possible. And the fact that every year consistently we were able to more than double our customer base, it's a great achievement. And now the goal is to continue the very strong growth in the subscriber base as well. The second element is to become more and more critical in the daily life of our customers by adding more features, expanding the product offering, and gradually building a strong lifetime value, and that will enable us to grow organically fast, and we will do it organically and through acquisition. Recent example is the Key solution, which is our own proprietary password manager that was added to ExpressVPN. Very good results so far, and the goal there that we will continue to sell Express in one simple subscription fee and give the user all the security he needs. Another product release that we will be launched very soon is the secure the private home Wi-Fi router, which is a product that we believe will resonate very well with our existing user base, that will enable to encrypt all their internet home Wi-Fi connection. And hundreds of millions around the world don't have any security in their home Wi-Fi, and then we will offer them one of the most advanced solutions available in the market.
We are very pleased with our financial result for the last 6 months. We finished the period with 62.9 million cash on our balance sheet and decreased the net debt to 391.9 million. Just to remind, our net debt, our debt is include the bank facility of 108 million and the 2 deferred unconditional payment to ExpressVPN founder of 345 million in total. The first payment is due on December 2022, and the second one on December 2023. The adjusted leverage decreased to 2.4, with us as management aiming to decrease it to 2 and below until the end of the year. As you saw, we signed an option agreement to pay early the deferred consideration of ExpressVPN, of the ExpressVPN acquisition. It's an option, it's not obligated, with a significant discount of 8.39%. The digital privacy continue with growth of 19% on a pro forma base when comparing the 6 months of H1 2021 to H1 2022. The digital security continue with the positive segment of growth with 15.7% growth. The digital content, the revenues look flat, but when you are comparing revenues on full pro forma base, this period to the previous, we have 25% increase, and the reason for that is for H1 2021. We need to cancel revenues that derive from ExpressVPN prior to the acquisition.
Just one more comment, that the prepayment option agreement that we signed will only have positive impact on our gearing. So we are not upsizing any debt, it's replacing a short-term debt with a long-term debt, so it will free up, except of, in addition to the financial gain of immediately selling between $20 to $30 million as a result of the discount and cancellation of the underwriting, which will reduce the gain automatically. We will free up the cash flow completely as of next year, because of the switch from the short-term debt facility to a long-term debt facility.
Part of our roadmap was to scale our user base and reach significant scales number of subscription. We knew that in the beginning our cash conversion will decrease following the investment in marketing. But as we anticipate, the cash conversion will improve significantly as our user base will become more mature and bigger number of users. As you can see on 2019, our cash conversion was 6.6% and 1 million cash from operation. During 2020 and 2021, we increased to around 50%. And on H1 2022, we reached to 101.3% and 90.1% adjusted cash from operation.
Again, 2022 is only H1, whereas the other years are fully on a full basis. And I'm very happy that we got to the stage. By the way, we knew we'll get there. As we build up our course, we knew that in some scale we'll start to see acceleration in the cash conversion ratios. And I'm very happy that the market and our investors are able to see it as well in the first half of the year. Now, our unit economics is continuing to be very attractive. This slide shows certain cohort and how we develop and build the revenues over the years compared to the initial cost to acquire the customers in the period. So if you look on the first half of 2018, in that cohort, on every dollar we spent on marketing, we generated so far $3.4 back. If you look on our previous investor deck from March earlier in the year, that you'll see that the same cohort generated $3.1. So in 6 months, we added 3 cents for every customer in that cohort. And when we'll meet next period, we'll see that it will be closer to 4 because a lot of those users will continue to renew their subscription. On the other end, the younger cohort, people joining us the first half of 2022, this is the most fresh cohort. You see that we already recovered 80% of our marketing spend from the initial sell. This is much better than a couple of years ago that it was around the 0.6. Why it's improving? Because 2 main reasons. One is that as we grow our subscriber base and we scale up, we are joined by definition by more and more sales coming organically with no any customer acquisition cost because the size of the brand and profile of the brand is much more significant than before. And the second element is the impact of web sellers. The acquisition we completed in March last year that both improve each one of the KAPE brands and puts us in a completely different level in our ability to drive sales through organic traffic sources without paying any third-party customer acquisition cost. And the result is decline in the overall customer acquisition cost and more efficiency in the marketing model that enable us to recover more of the marketing spend already from the initial sell. Now, this is great, but what make it even better is putting it into a context of the scale of the user base that we already achieved. So it's now more than 6 years that on a monthly basis, net of churn, we were able to grow our customer base and build up a very healthy mixture between the more mature cohorts that as of the end of June were about 55% of our overall subscriber base and the younger cohorts. And this is the main reason and the key driver to the continued improvement in profit margins and the scale up in cash conversion and cash flow that Oded show you in this slide, because we just generate more and more revenues from renewals. So in 2022, just as an example, we started the year that 65% of our yearly revenue already coming from renewals of packages we sold in previous year, and it gives us a great level of comfort and obviously makes the visibility of our future earnings and revenues in a very attractive place. Now, KAPE, if now look a little bit down the line, we were able to build up one of the most scalable digital privacy platform in the world, even before the market changed and started to speak again about profits. We were very disciplined in growing our top line, but in a profitable way, and build up a very cash-generative business. And we want to do more. We want to continue grow the business. The H1 performance of KAPE was very strong, and we started H2 in a very strong momentum. And the integration with ExpressVPN goes very, very well. We already have a very large subscriber base, the retention in a very good level, but we want to use this opportunity to continue and make brave moves to build up KAPE as a global leader in the new generation of consumer security providers, and to do it both organically and through acquisitions. One of the things that we see in the market is that as a result of the decrease in multiples in the tech world, that unfortunately KAPE suffered from it as well. So there is a very frustrating mismatch by the strong delivery of the business, financially and operationally, in the first half of the year, and where our stock price. But I'm sure we will be rewarded by the market and get back as the market recover to a more relevant place to be. But we don't want to wait. We see that there are businesses and companies in the market that are high in our priority list and high in our target list, specifically 3 opportunities that we engage with on a regular basis, and we develop the conversation with them. And one of the things that happened with KAPE is that we became a preferred acquirer, that we were able to build up a very strong track record in the industry of a business that knows to buy well, but integrate better and accelerate the growth of businesses that we are buying, and enable management teams that joining the KAPE team to take significant operational roles. And most of the existing management team are people that join us as part of the past acquisition, which for us is great. It's just a very efficient way to expand the management bandwidth and bring very strong people into the organization. And from the other end, it's people, and especially businesses that run by the management and owned primarily by the founders. We give them the opportunity to join forces with a more established, stronger group that can bring them to a completely different scale in terms of that numbers of subscribers, and dominate the digital privacy and security market in the next few years. And the priority now is to expand our product offering. We build up a very strong capabilities in the digital privacy world. We are there. We have millions of people that trust us in their digital privacy. We want to continue and grow into adjacent market and gain more market share in the endpoint security market as well, as part of our digital security activity. And we proved that we know to buy and be disciplined in the prices that we pay when the market was high. So today it's like we are in a candy store. So there are so many opportunities that are highly executable, and we can enter the group in attractive prices, and we want to beat them. And unfortunately, in today's environment, we can't wait. We can't speak with US private businesses that knows that KAPE is completely tied in the cash flow, because all of our operational cash flow is being used to pay the deferred consideration and to be able to get the buying from vendors that will be able to execute. And this is the reason that we are doing the placing now, that we want to move to the next acquisition on the back of very strong organic activity and very successful integration with ExpressVPN. UniqueMind, our majority shareholder and main investor, already subscribes to $110 million, and we aim that in other investors in the market, existing holders and new holders, will use this opportunity, and we are happy to upsize the raise to up to $200 million in total. That will be sufficient for us alongside the existing and new credit facilities to fund the next acquisition. Now, before I'll finish and I'll allow you to ask questions, I just want to say that I'm very pleased with the first half of the year. KAPE had by far the best performance we ever had, and I'm particularly pleased with the fact that we're starting to see the scale up in the cash flow. That it's something that we knew will come, and I'm very happy that you are able to see it as well in the results of KAPE in the first half of the year. So thank you for listening for the formal part, and I'm very happy to open the floor for further questions.
Ido, Oda, thank you very much for your presentation. Ladies and gentlemen, please do continue to submit your questions just using the Q&A tab situated in the top right-hand corner of your screen. We've received a number of questions throughout today's presentation, and I'd like to start off the Q&A session with this question, which reads as follows. Please could you comment on plans to move to the LSE main market or NASDAQ? The valuation would be likely to be significantly higher.
So this is something that we are considering for almost a year now. I agree that AIM is a great market and serves well, but in the size that KAPE today, it will make sense that in some point we'll move either to the LSE or start the relocation to the NASDAQ. I think it's just a question: what is the most efficient way to do it, and what is the right time? Of course, we will not do it in period that the NASDAQ is not is in a down momentum or negative momentum. We want to find the right time for us to do it, but this is something that we are certainly considering. It's just a question of when and what is the most efficient process to achieve that. And obviously now that Abbas is leaving the London Stock Exchange, we will be very happy to be the leading consumer security business that traded on the London Stock Exchange and be proudly one of the largest tech businesses traded on the London Stock Exchange.
Thank you very much for that. We have got another question here, which asks, given the success of previous acquisitions, what would you look for in new ones, and what are your thoughts re-expansion into new areas?
So KAPE, a significant part of our strategy is buy and build. This is an area that over the years we built up a lot of experience in integrating businesses, and there's a very long list of lessons in order to drive an efficient integration processes. The next acquisition priority will be an expansion of our product offer. So we are very happy to scale up to millions of users in the digital privacy market. We want to offer them more, and to use our approach around the product development that we incorporate all of our solution into one tech platform to enable an efficient delivery of service as part of the next acquisition as well.
Perfect. Thank you very much. We've got a question here from Stephen G, who asks, are retention rates measured by customer or by revenues per customer?
Number of customers, sorry. So not in dollar terms, but in terms of number of customers.
Thank you very much for providing a bit more color there. In your interims, you included a large $62.5 million pro forma adjustment for deferred contract expenses adjustment. Please could you explain this and also explain when we might expect it to turn into real costs which hit the P&L? Thank you.
Okay, so if you remember, we discussed it on the annual results. When we acquired ExpressVPN, according to the accounting rules on day one, we zeroed out the deferred contract cost assets that they had on the balance sheet. It was $209 million. If Express was part of KAPE from the beginning, we will still have these assets and it will be amortized according to time. Now, because we do not have it, we are adding back the expense that the company should have had in case we had ExpressVPN in the beginning. So on the acquisition time, we had $209 million. We already realized $8 million on 2021, 62.5 on H1. I believe by the end of the year, it will be around $120 million. The rest on 2023 and going forward, we will not need this adjustment anymore.
Thank you very much. Moving on to the next question. Can you please provide more context on digital content? year-on-year results. It appears that the segment revenue has been flat year-on-year while the industry is growing and user base with intent in digital security is also growing. Has the payout from KAPE brands been significantly reduced, which resulted in flat booked revenue? Furthermore, it seems that the segment profitability result has declined from 44% in H1 2021 to 16% in H1 22. What are the main reasons in this?
So firstly, the revenues of the digital content are not flat. It's on a reported level, it's flat only because last year Express was still classified as a third-party client. So revenues this year deriving from Express are being cancelled as an intercompany transaction. If you look on a pro forma basis, the digital content segment is growing by more than 25% in the period and more than 50% on a full year basis. The only reason that is $27.5 million in the top line is just optically as a result of the impact of consolidating Express into the same group as Web7. The digital content, we look at it from two main angles. One is to make the KAPE brands better and to drive more sales to each one of the KAPE brands from organic traffic sources. And this is one of the main reasons that you've seen an uplift in the marketing spend that we recovered from the initial sales to 80% in the first half of the year. And the second element is we look on the digital content as an independent growth engine. We do work with lots of third-party brands, and we encourage the Web7 team to expand into new verticals. And this is the explanation to the reduced segment margins, only because we did expansion to new verticals, Website Planet, WizCase, Safety Detectives, that are all digital assets that part of the expansion strategy to new verticals that are not necessarily digital privacy and the digital security activity and the core activity of KAPE. And in order to gain market share, we need to invest at the beginning until we grow into a mature stage and we'll start to see the same profit margins and as we have in the more mature verticals of VP and Mentor in the digital privacy space and the activity we're having in the digital security as well.
Thank you very much. A short question here. How many active subscriptions do you have?
So all of our 7 million are active. We don't have any free product, and all of our customers are paying customers. So now we cross the 7 million subscribers in total. So I hope I understand the question correctly, but with KAPE, we are paid-only business. Once the user buys the subscription, he becomes paying customers and he get access to all the features of the type of the subscription that he acquired.
Perfect. Thank you very much. What is the target return of capital you have in mind going forward?
In terms of investment into customer acquisition costs, so we want to at least be in the same level as we are today, but grow the numbers of subscribers that we are having. So I think that to be in a position that on every dollar we spend on marketing, we generate $3.4 back after 4.5 years or $3.1 after 4 years. In the scale that KAPE is trading today of millions of people in the subscribers, there are not too many companies in the world that are able to show the same performance metrics, especially in the consumer technology world. So we want to continue grow our subscriber base from new sales, new sign-ups, while keeping the same LTV to CAC ratios.
Thank you very much. We've got a question here from Ian who asks, will individual investors be able to subscribe to the planned fundraising acquisition exercise? If so, how? I think that's the final question as well.
So definitely, so tomorrow morning we will release the primary bid placing announcement, and the most efficient way to do it is through the primary bid platform.
Ido, Oded, thank you very much for that. I think you've addressed those questions you can from investors, and of course the company will review all questions submitted today and will publish those responses on the Investor Meet Company platform. But just before redirecting investors to provide you with their feedback, which I know is particularly important to you both, Ido, could I just ask you for a few closing comments?
Thank you very much for joining today, and we appreciate your support and interest in KAPE. We are advancing very rapidly in our journey to become the global leader in the digital privacy and security market, helping millions of people around the world to live more secure and private digital lives. And I'm very, very happy with the results of KAPE in the first half, and I'm very pleased that the second half continued in the same momentum. So thank you very much for joining us today.
Ido, Oda, thank you very much once again for updating investors today. Could I please ask investors not to close this session, as you'll now be automatically redirected to provide your feedback in order that the management team can better understand your views and expectations. This will only take a few minutes to complete, but I'm sure will be greatly valued by the company. On behalf of the management team of KAPE Technologies PLC, we'd like to thank you for attending today's presentation, and good afternoon to you all.